What's going on, investors? Today we're going to do a quick overview, get a quick update on the popular income ETF RYLD, also known as RYLD. We'll see what's up with that amazing, nearly 14% dividend yield that this ETF boasts and how it compares to other popular income ETFs such as QYLD and JEPI. Now, RYLD is a Global X product. It follows the popular selling call options or covered call strategy that is able to produce high premiums, and then they're able to give that income out to shareholders via dividends. RYLD is seeking to track the Russell 2000 index. Now, unlike the NASDAQ 100 or the S&P 500 indexes, the Russell 2000 is smaller market cap companies. The average market cap as of last quarter was just under $1 billion. The 2,000 companies that make up the index is rebalanced every June with additions and subtractions. Companies in this index can expect to have higher growth values for the future, but this also means more risk and more volatility. So you're not getting exposure to the Apples or the Microsofts of the world or all those other mega cap companies because RYLD, it doesn't track those companies and they're not on the Russell 2000. There's a good chance you probably don't even recognize some of their top holdings. Some you may have heard of before are Chesapeake Energy, BJ Wholesales, Biohaven Pharmacy, which we talked about a few weeks ago. They just got acquired by Pfizer. RYLD was established in April of 2019, and they have paid monthly dividends ever since then. Even during the C19 crash early 2020, the fund continued to pay dividends every month and was near a 20% yield at one point in time. Though it should be noted that RYLD fell 40% in value in February 2020 to March 2020, as this fund does not offer any sort of crash protection. The fund did recover to its pre-C19 highs, but has fallen again as the market heads into a recession this year. Investors really love RYLD because it does offer nearly a 14% yield. I was able to calculate the trailing 12-month dividend yield at 13.85%. The stock market historically, on average, returns 7 to 10% a year, so let's hope that RYLD can continue this hot streak. The ETF currently controls about $1.3 billion in assets under management. For comparison, the last time I made a video about RYLD, which was last summer, this number was only $89 million. So it's grown quite considerably in 1 year. That means more investors are growing confident in RYLD and Global X and putting their money with these fund advisors. But this is still nowhere near the amount of assets under management that the ETFs QYLD or JEPI have. As we get into our comparison tracker with RYLD, QYLD, and JEPI, they've all been around for at least 2 years now, with QYLD going back almost 1 decade. Now, this recent downturn in the market pushes QYLD to over a 15% yield. JEPI has nearly a 9% 12-month trailing yield. I do want to note that options premiums are directly correlated with the value of the underlying security. So if a stock is trading at $100, then drops to $75, when you go to sell covered calls, as this ETF is doing, it's probably not going to get as much in premiums now because of the price drop. So I know you're looking at these ridiculous yields. Just know that sadly, they will come back down. We're already starting to see this in income ETFs, as the May distributions were considerably lower than they were paying out just a year ago when the markets were looking much better. Now, RYLD's expense ratio is expected to rise up to 70 basis points in the future. That's $70 in fees for every $10,000 invested. That is not cheap by any means, but just remember that doing covered calls, not only does it require a lot of upfront money, but it also requires a lot of time. So it's nice to have this automated for you, and sometimes that is worth paying that extra premium. JEPI does some old-fashioned buy and hold strategies, so that allows for them to collect dividends and enjoy that capital appreciation. As a result, some of those distributions that they give out to shareholders, they will be taxed efficiently, while with the Global X products, distributions will likely be taxed as ordinary income, which is not at those favorable tax rates unless it's in a tax-sheltered account. So keep that in mind because Uncle Sam, he always gets paid. When we do a back test of the year-to-date performance since 2022 started, we can see that QYLD has performed the worst at negative 15%. RYLD is at negative 8% year-to-date, and JEPI has actually performed the best at negative 5%. For comparison, the S&P 500 has returned negative 13% year-to-date so far. So overall, RYLD is actually doing better than the market, and I believe it should continue to go this way if we continue to see a downward or a flat market. RYLD will certainly trail the S&P 500 in a bull market as it gives up upside with its call options. However, I personally anticipate the market will either continue going down or move sideways for quite some time. Overall, it looks like RYLD is another solid income ETF and a good one to have in a blended portfolio with other income ETFs, as it gives opportunities to collect some gigantic monthly dividend checks. Just note, with these depressed stock prices that we've been having lately, I wouldn't expect as juicy of premiums as we've gotten in the past, so I expect that dividend yield to come down a few percentage points, but still anything in double digits is amazing. It might be the only thing in this world that is outpacing inflation these days. If you want more content on RYLD, check out the video my good friend Matt Muniz did on RYLD. I'll link his channel in the description below. He's a very sharp guy. If you've enjoyed this video, be sure to hit that like button and make sure you subscribe for more income ETF videos, as I've been doing these update videos for quite some time and I'm sure you don't want to miss it. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.